There is a relationship, we know that, between Tesla's share price and what's going on at Twitter. And Linda Biacarino's, I think, she's a great headline for Twitter. She really is. I think she's going to do interesting things. I think that the combination of this shareholder meeting, maybe there was some anxiety around it. I think the new models and Gene Munster brought that up. I mean, just the size of the potential market there, I think is very significant. Let's not discount that mega cap tech has had a huge run. I mean, I bet if we plotted Amazon and Microsoft and Facebook, they've had big weeks too. So I think we just have to understand all this.
Tesla stock is massively undervalued with tremendous upside potential. Although the stock price may not be significantly high at the moment, investors who stay bullish on the car company may be set to participate in Tesla's global takeover.
Welcome back to Fast Money. Tesla is our chart of the week. The stock rallying more than 7% at the shareholder meeting. Elon Musk signaled an openness to advertising Tesla to boost business. He stressed that with the new CEO at Twitter, he will spend less time at the social media company. And he also added in his interview with David Faber that he's going to say what he feels like saying it, even if it costs him money. Cost the shareholders money. Seems like a Teflon kind of week for Tesla. Even a headline about offering discounts today on some Model 3s in the U.S. didn't dent Tesla's gains. They also talked about a Model 2, which a lot of investors were really looking toward. This seems like an interesting jumpstart here.
Wall Street recently rated Tesla stock as a moderate buy based on 15 buys, 11 holds, and 4 sell ratings. The average price target for Tesla stock at the time was $202.84, implying 16.7% upside potential. Many Tesla investors and analysts are starting to see the possibility of the stock price going up, especially after the numerous announcements and updates disclosed by Elon Musk at Tesla's recent shareholders meeting. While it is still uncertain what the future holds, Tesla seems to be on the path for success. Hey everyone, and welcome back to Tesla Tomorrow. Tesla shares recently rallied 7% and breached the $180 level for the first time in a month. At the shareholders meeting, Musk gave 2 next-gen vehicles, potentially priced at $25,000 and $30,000 each, rolling out by late 2024, with the demand potential at about 5 million units. He also said that the Cybertruck is on track for commercial launch by the 4th quarter, with a unit potential of over 250,000 in 2024. The Tesla CEO hinted at advertising on a small scale, which will likely accelerate EV adoption without having to rely on price cuts. Several investors have found these updates to be very positive for Tesla, and maybe the stock price will once again cross the $200 threshold, and hopefully this time it continues on an upward trend. What does the future look like for Tesla stock? Let's find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Elon Musk recently stepped down as CEO of Twitter and appointed NBC Universal executive Linda Biacarino as his replacement for that role. Surprisingly, Tesla stock fell after this news went public. Several analysts have reacted to this, and many of them see this as being a potential booster for Tesla's stock price. For instance, Gene Munster, managing partner at Deepwater Asset Management, assessed that Musk's departure from Twitter's CEO position is a fractional positive for Tesla shareholders, because he will likely spend more time on Tesla. In a similar vein, Hargreaves Lansdowne, analyst Sophie Lund-Yates, expects Tesla's investors to celebrate this move, with Musk's very hands-on approach at Twitter leading to concerns that he's taken his eye off the ball at his own EV company. Tesla is a prominent electric vehicle manufacturer, and that has experienced significant growth and volatility in its stock price in the past. And so just as Musk won't be distracted by Twitter too much anymore, investors shouldn't be distracted by some of the daily headlines involving Tesla. Instead, they should channel more of their efforts towards doing research and actually focusing on Tesla's rapid internal expansion plans. There are several other factors that could potentially contribute to Tesla's stock price increasing in the near future, based on historical trends and common market expectations. Firstly, Tesla has established itself as a leader in the EV industry. It enjoys a considerable market share and a strong brand reputation, which could continue to drive demand for its products. As the transition towards sustained transportation accelerates, Tesla's position as a forerunner in the EV space may contribute to its stock price appreciating. A recent report claimed that some of Tesla's senior executives plan to meet with their Indian government officials. The report stated that they'll be discussing local sourcing of components for Tesla models, although these Tesla executives may have more than manufacturing on their minds. Similarly, in France, Musk evidently intends to make significant investments, with reports stating that French President Emmanuel Macron sought to persuade Elon Musk that France is a leading hub for foreign investments and electric cars. It's no secret that France is receptive to clean energy incentives, so Tesla may be able to position itself as a welcoming infiltrator among EV giants there. Aside from making viable partnerships and investments, Tesla is also trying to make its cars more affordable. And to make it better, the automaker has started a price war that has kept several other car companies in a complex position with their revenue. It is apparent that competitors cannot win in the price war initiated by Tesla if they do not want to go bankrupt. Therefore, it is highly likely that Tesla will increase market share during this macro turmoil at competitors' expense. Considering the nature of the EV business, increasing sales and market share for Tesla is the most important factor for growth at the moment. Tesla is aggressively ramping up production with long-term investments at CapEx. So it is also a long play to the point where market leaders will take all. Also, the nature of EVs gives the company cross-selling opportunities like new software or superchargers, and it is not just about getting profit from selling a single, durable product to customers. Tesla has been actively expanding its manufacturing capabilities and building new gigafactories all around the world. By increasing production capacity, the automaker aims to meet growing demand and reducing costs, potentially leading to improved profitability and investor confidence. Furthermore, the company's efforts to penetrate new markets, especially in China and Europe, could provide opportunities for future revenue growth. In China, Tesla is seeking regulatory clearance to boost output at the automaker's Shanghai unit. In addition, the automaker is also looking to produce pouch battery cells on a massive scale. The trial production line for Tesla's proposed pouch-type battery cells would have initial annual capacity to make 20,000 amp-hours of cells. The car company also announced that it's on track with its own 4680 battery cell development and has already reduced the cost of production by 25%, halfway to the 50% cost reduction that it flagged at its Battery Day in 2020. Tesla Senior Vice President and Head of Powertrain and Energy Engineering, Joe Baglino, gave some updates on Tesla's development of its 4680 cells and structural battery pack during Tesla's Q1 earnings call. Baglino stated that Tesla's Texas 4680 cell factory, which is partway through commissioning, will have a 70% lower capital cost per gigawatt hour than typical cell factories. The 4680 battery program is considered key for Tesla and is an important part of its planned production of the Cybertruck, which is due to start up later this year. Tesla has consistently generated its ability to innovate and develop new technologies in the EV sector. Its advancements in battery tech, autonomous driving, and energy storage solutions have the potential to enhance its competitive edge and capture additional market share. If Tesla continues to lead the industry in technological advancements, then it could generate positive sentiment among investors. Similarly, several governments worldwide have implemented policies and incentives to promote the adoption of electric vehicles. These measures, such as tax credits, subsidies, and strict emissions regulations, can positively impact Tesla's sales and profitability. Analysts often consider government support when assessing the potential growth prospects of EV manufacturers like Tesla. Tesla's management decided to sacrifice margins over the short term to sustain more earnings potential over the long term. And interestingly, this may be starting to pay off. If we dig deeper into pricing power, then we find that Tesla is the only company with a net cash position, compared to major automakers with the strongest liquidity position. Tesla has vast pricing power to address weakening demand due to challenges in the macro environment, including probable recession for most of the developed economies, which are the most aggressive EV adopters. However, there is a rather high uncertainty in times of the extent and severity of the recession. While many Tesla bulls believe that the automaker will weather the storm, broader conditions will affect its revenue growth and margins expansion pace. These metrics, in turn, will directly affect valuations, meaning that the tougher the recession, the longer it will take for Tesla to achieve its long-term goals. It's important to note that stock prices are influenced by numerous factors, including overall market conditions, economic trends, geopolitical events, and investor sentiment. In a time of high inflation and fierce competition in the EV space, it's understandable that Tesla's stakeholders want an assurance that Musk is committed to his car company. However, while considering all market factors that could potentially affect the stock, it is also important to consider Tesla's hard work through the years and how the automaker has built its way up into this leading position. Overall, as an investor, it's important to conduct thorough research and factor in your own investment goals, risk tolerance, and time horizon before making any investment decisions. Do you think Tesla stock is set up for a massive run? Let us know down below, and don't forget to tell us what your valuation on Tesla stock is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.